Hello everyone, I'm a spare tire in the capital world. Today, this video tells you about crude oil, because recently we have been paying attention to crude oil. Let me tell you about the fundamentals of crude oil after the recent increase in Opec. The price of crude oil has been rising. So why is this? In fact, in addition to the risk of the Red Sea geography supported oil prices, it also includes saying that the implied volatility of crude oil is consolidating at a low level. Added to Trump's tariff threat, it suppressed the market's willingness to aggressively suppress. So we see that crude oil prices have been consolidating. On Monday, Opec announced an increase that exceeded expectations. So crude oil is after gaping and opening lower. It bottomed out and rebounded around the $65, combined with the latest flow of options, funds. Coal options as a whole are still in a situation of adding positions, especially in areas where crude oil prices are below 66. Added one defense in a row. Further consolidate the strong strength of this support. So the second one is WT crude oil TFDC. Its long positions have been rising for 5 consecutive weeks, which means this time, because of the reduction of positions in airdrops, it is greater than the strength of this long position reduction. Then its support efficiency is relatively weak. At the same time, although OPEC said it has announced further production increases, but the recent actual increase in production is far below the configured quota. In other words, member states need to compensate for a historical overproduction. Moreover, the decline in US drilling activity also indicates that, therefore, the output of crude oil has peaked. Then the output reaches the bottom. It is relatively tight on the supply side. Well, from the perspective of futures, judging from the reverse spread structure of WT's futures, the worse the distance, the narrower the distance. In other words, the demand for current areas is relatively strong. From the perspective of supply and demand fundamentals, is it still preempting room for oil prices to decline in the medium term or in the near term? May maintain a pattern of strong shocks. The third point is, from the perspective of OPEC. OPEC actually does not want to maintain the price of crude oil. But what we see now, it is very active in competing for share of this market. In other words, by relaxing this reduction in advance. OPEC officials are not just saying they are balancing the market, it's actually executing it directly. Well, squeezer policy, its goal is very clear. I want to develop American shale oil. The United States has already calculated WT crude oil prices below $60. Drilling activities can continue. That means it would be better if it was under $50. The oil fields may fall into this purity. OPEC will start holding a barrel at this time. Not in this way. Say things like Trump to pull up the price of crude oil. Go engage in this price war. But no, it's just a bucket. I will increase your production in this way. In this way, it is urgent to get this border producer to withdraw from this market, to regain a share of the market. So for crude oil in the second half of the year is faced with a contradictory situation. Think about it this summer. One, demand is at its peak. What about the OPEC family? Increase production again. It's equivalent to increasing supply. At the same time, the risks in the Middle East are reduced and very unstable. Then tariff policy is now an uncertain factor. So for the price of crude oil, there would definitely be a rising demand in the short term. Although, since Trump came to power, I think oil prices are on the top. Long-term resistance to decline. Because Trump suppresses crude oil. We have verified the 55 in the previous round. A suppression in the second round. That must be a matter of time. So now the WT crude oil has stabilized above $68. From a technical point of view, moving average up, and this RSS has stabilized in this bullish range. In other words, it broke through 68.85, then the price of crude oil will still go there. This resistance of 70 to 71.5, it may even reach 74. So if there is no emergency, so original oil prices, it may remain fluctuating around $67 to $70. Zoapi crude oil inventories surged by 7.28 million barrels. That's what. It may imply that demand for crude oil is slowing down. Then what about fuel oil and gasoline, refined oil? The inventory went beyond expectations. Or rather, it is the demand for replenishment from the boosted refineries. So if today's AIA did not have the pressure to verify the inventory, then the price of crude oil may have a momentum for a wave of decline. So now from a technical perspective, the price of WTI crude oil still remaining above this moving average of 671. Also, this 200 moving average is above 6,684. That means that there may be a long position in the short term. The upper range is relatively large, near route 64 to 74, but short-term resistance above is at 70. The long-term main force is around 74. This is something you need to pay attention to.